AI deals, Trump crashes the market, and gold hits new all-time highs. This and many more. Ladies and gentlemen, welcome to Wealth Down with me, Norbert Menhardt, where I build and protect wealth. So the topics of today's market recap are tariffs, escalation, returns, of course, with Donald Trump making just a post. Then we have data blockage and uncertainty in the market due to our beloved shutdown. We have AI deals, pivots and diversification, and of course profit taking and technical breakdowns from a couple of stocks that we're going to talk about. Also some sector bifurcation and intensification, which intensified last night when we got the big news. And last but not least, my trades for the week, and I have a big surprise for you at the end of this. You're going to be surprised. I was surprised. So ladies and gentlemen, let's just jump right into it with what exactly happened on Friday, because the week was going perfectly, and then Donald J. Trump said, it has just been learned that China has taken an extraordinary aggressive position on trade and sending an extremely hostile letter to the world stating that they were going to, effective November the 1st, 2025, impose large-scale export controls on virtually every product they make. I would like to say it in Donald J. Trump's voice, but I can't do any Trump. And some not even made by them. This affects all countries without exceptions, and was obviously a plan devised by them years ago. It is obviously unheard of in international trade and a moral disgrace in dealing with other nations, so Trump said. So this is a direct quote from its tweet. And he continues, based on the fact that China has taken this unprecedented position and speaking only for the USA and not other nations who were similarly threatened starting November 1st, 2025, or sooner, depending on any further actions or changes taken by China, the United States of America will impose a tariff of 100% on China over the above any tariff that they are currently paying. Also, on November 1st, will impose export controls on any and all critical software. It is impossible, so he concludes, to believe that China would have taken such an action, but they have, and the rest is history. Thank you for your attention to this matter. Donald J. Trump, of course, signing it as president of the United States of America. So this is a direct quote from the Truth, which is then posted on Twitter because I'm not part of Truth Social, and from the president of the United States. Now, this directly led to the sun. The sun is burning. Just take a look at the market. So the market opened. I also had some positions on the market just as it opened, and then this happened. Wow. Just look at it. Everything down, except in Pepsi, of course, and Philip Morris. So we're going to smoke or vape and drink Pepsi meanwhile. And then we're going to go to CVS because this is also up. Where's CVS? There's CVS up 1.51%. So if you take a look at the indices, let's just do here a market recap. Let's jump to the next segment of this weekly breakdown, a market recap and overreaching themes for the last week. We have our indices, S&P 500 closing at minus 2.71%. We have the NASDAQ closing at minus 3.49% in just one day. This was just in one day, this major fall. Dow Jones down 1.9%. Now we're going to go into the Russell. Just take a look at some commodities and alternative assets. So oil, and we're going to come to my trades. Oil down 5.3%. And this is mostly based on the fact that if China does not export, then they don't have demand on energy. And I don't know why, but everything that was going to happen on Friday was kind of telegraphed at, I believe, on Tuesday already, Thursday. Because I saw this moving in oil and I could not understand why, after it was pretty clear there's going to be a ceasefire and the end of war between Israel and Gaza or Hamas, oil still did not drop that much. It was dropping, and then boom, this come out, and then it really dropped. So the markets kind of were expecting this move. Now, let's not forget about gold. Gold reaching one of the all-time highs in history, reaching $4,000 per ounce of gold. Take a look back here, back at gold on the year, it's up 54%. Now, just keep in mind that the S&P 500 is up 13.40% and the NASDAQ is up 20.12%. So for the year, you really crushed it with gold. Over the last 5 years, let's compare gold, you would also crush it with gold. Over the past 10 years, well, not so much. And I would caution, so none of this is financial advice as always, but I would caution, take maybe some profits in gold. Also, silver up 1.87%, closing up the Friday 1.87%, breaching once more. It breached the 50, not in the morning, somewhere before the market opened. It breached its $50 per ounce. Then it came back down, but it did not surpass the 50, or it did not come under 50. So it breached the 50, went up to 51, and came back down a bit. Now also silver up 64% for the year. Take a look at all-time highs. Silver was at 47 in 2011, and since then, well, you can see it right here. You should maybe also take your profits in silver. We're not going to look at copper. Copper down major 5.71%. This is due to the market, everything. Last but not least, Bitcoin down 1.39%. For the year, Bitcoin up 84%. So the biggest winner for the year, or yeah, for 1 year, not year to date, is Bitcoin. But year to date, 19%, gold 53%. So no, actually gold is the biggest winner. So if you were started on the 1st of January, where should I invest? It seems that gold would have been the best investment of them all. So that's it for this segment. Now let's get into the next segment, which is macro and policy overview. So in our macro and policy overview, we see that the US government is still in shutdown since 1st of October and has halted most of the data flow. Now, this is why the markets are so jittery. And although Trump came out, posted something, it doesn't have that much of a repercussion. It's not that heavy, but still the markets reacted because they were just waiting for some kind of news. If it's just a little bit of bad news, they're going to overreact. So is this an overreaction? I don't know, but definitely it was a massive reaction. So also non-farm payrolls, so no non-farm payrolls, no retail sales, no ISM manufacturing data, nothing came out because the government is in shutdown. The September CPI report on October 24th is still expected to be released to calculate the Social Security adjustments, and markets are just flying blind, relying on sentiment and headlines instead of data. So as you can see, sentiment and headlines, as soon as Trump came out with his post, and boom, everything exploded. So let's just also take a look at what actually came out, because FOMC minutes did not come out. Nothing scheduled for Tuesday. On Friday, on the 10th, we had our Michigan consumer sentiment, which from a prior 55.1 rose to 50, actually went down to 55 with 0.1, but it was expected at 54.2. And core PCE remains at 2.9 year to year. Markets await a CPI confirmation later this month. And this should be out, let's see, next week. Chair Powell speech and PPI, retail sales, building permits, and housing starts. This is what is expected to come out next week. So let's see what we're going to get. Now, let's move on to the next topic, geopolitical trade and the AI power shift. So Donald J. Trump came out, and according to CNN, this is directly from CNN, 100% tariffs and rare earth tensions, which President Trump announced a 100% tariff threat on all Chinese imports unless Beijing reverses rare earth export restriction. So this was actually the major problem. Now, it's not even the problem on the restriction measures, it's the refineries, the production, is because it costs a lot of money to, those rare earth minerals are not that rare. The problem with them is the refining of them, because it's extremely polluting. So you kind of need a little bit of, let's just call it loose regulation in order to refine those products. So a planned meeting with the President Xi Jinping of China was, well, not canceled, because then after this report, there also was a meeting of the president when he announced that 17 billion something investment from AstraZeneca. And at the end of that conference, he was asked if the meeting was off, and he said, I'm going to be there. If he's there and I am there and we meet, then it's going to happen, and if not, it's not going to happen. So he didn't actually cancel his trip. Now, this fueled the fears of a renewed trade war, of course. Rare earth and clean energy metals became a new battleground. Also, remaining within our trades and AI power shift, a major power shift in, actually not, so I don't think this is not that big of a power shift, but let's just take a look at the headline. The headline says AMD and OpenAI announcing strategic partnership to deploy 6 gigawatts of AMD GPUs, 6 gigawatts of power. So OpenAI plus AMD breaking Nvidia's monopoly. Not quite. In a surprise announcement, OpenAI partnered with AMD, ticker symbol AMD, Advanced Micro Devices, to expand its GPU infrastructure, signaling a strategic diversification away from Nvidia, ticker symbol NVDA. Now, so I'm just going to go over the facts. Facts are, the partnership includes deployment of up to 6 gigawatts of AMD's GPUs through 2030, starting with 1 gigawatt in 2026. OpenAI also received warrants to purchase up to 160 million AMD shares, roughly 10% stake in the company then, upon milestone achievements. Really important, upon milestone achievements. And AMD stock surged, of course, 25 to 30%, and then gave it back on Friday on that announcement. Nvidia and TSMC dropped sharply as investors. It's not sharply, but they did drop a bit. So, market implication: OpenAI diversification compute, reducing dependency on Nvidia, positioning AMD as a second source supplier, which is not bad, but they received actually the money because Nvidia came, invested in OpenAI. OpenAI took that money and invested in AMD. I don't know where AMD is going to invest next, but that would be the next trade actually. So, global chip reshuffle as expecting increased competition for hyperscale data centers contracts from Microsoft, Meta, and Google. So check this out. AMD does have chips, but what they do not have is the entire package of Nvidia. Nvidia has the CUDA. Nvidia has already built in AI databases that are exceptional for pharmaceuticals, for medicine, for technology, they're delivering a complete package. Nvidia, I'm sorry. AMD only have their chippy, the MI 450. So not only, so this is not for the MI 450, but everything else that is going to come after that. So they're just going to supply OpenAI with those chips. So what I'm suspecting here is that OpenAI actually needs those chips to make or try to make the new device. So here's my 2 cents on this AI trade. It's not the AI itself, but it is the platform, the device, because when you're walking down the street, you're not influenced by AI. You need to take out your phone or your PC and then you can use AI. So you cannot just use AI from somewhere. Now, there are actually two major problems. Three problems for who has the best AI, where does the best AI live, and who supplies the power for the best AI. So someone has to win these 3 arguments in order to be the winner in this race. 3 arguments. Best AI, where does the best AI live, where does the best AI get this power? Because it also has to be efficient, financially efficient, for this to make sense. That inference, those questions that you send and receive, those tokens cost a lot of energy. And if they cost a lot of energy, somebody has to pay that energy. And I don't know if OpenAI is really profitable at this moment. And this is also why I think OpenAI is not coming public. They will come public maybe after they're massively profitable. Maybe. I don't know. We'll see about that. So let's close this topic. Now, let's go to a bit of sector and stock highlights. We already talked about AMD, but if you take a look at the stock, let's just do here a little bit of analysis. So this was the news, boom, explosion Monday. Then we had a little bit of pullback, then another explosion on Wednesday, a little bit of pullback. Actually went up, then it pulled back a bit, and then on Friday, boom, it's not down, but it gave back 25%. I just say 25%. Now I'm going to do here something that is maybe not that relevant, but let's go to 5 years, to the weekly candles, and we're going to do here a Fibonacci extension. So we're going to take the lows, highs, previous highs, and the previous lows. But the bullish case for this entire scenario is as following. AMD has just surpassed its old all-time high and maybe gave back a little bit, and it's just a tinge, or it was half the way over the 61.8% Fibonacci extension. You see that 127% up there. Bingo. This is not financial advice, but theoretically, that's the next level. Now, if you have AMD and did not sell it yet, maybe you should hold on to it. Maybe that level, which would be at AMD at $300 a share, may be a really good place to take some major profits for AMD, because if it reaches that level, there's a whole lot of future earnings already in that price. Is this, for those who don't have AMD, a place to buy new AMD shares? Well, if you are a so if you expect for the next 2 to 3 to 5 years to hold AMD, then yes, you could buy some shares here. It just reached its old all-time high, and its old all-time high was in March of 2024. So from March 2024 to October now 2025, they had over 1 year of doing stuff, of growing. It would be just logical that the company did grow, and the company can grow even further. If you missed it then, you can buy it now, because you're basically back if you have bought it over 1 year ago, and there's still upside. None of this is financial advice, but you could try it. I don't know how this is going to end. It's going to end badly, but that is tomorrow, a Monday, 1 month from now, on 10 years from now. I don't know. I just can see that money keeps rotating and people want this to work. How they're going to manage it, I don't know. Let's jump to the next one, which is Nvidia. So for me, Nvidia is the major player. Yes, it had its run. And do I see a doubling in this year for the stock? I don't know. Pretty hard in the next couple of months. But what I do see is opportunity here. Let's go to the weeklies. It didn't even hit the 20-day moving average on the weeklies. It only hit it on the dailies. And this is a really rush pull down. And I expect from here, for the entire S&P, from my logic, a little bounce. Is this going to be the bounce that is going to bring us up to new all-time highs? Maybe not. Maybe just going to go up and come down back again. But if Nvidia is going to come down, so if you want to nibble a little bit on this stock on Monday, this may be a good opportunity to do so. Not financial advice, but just think about it. It has the 20, it has the 50, the 100-day, the 200-day moving average, and then it has this massive zone here of support where we found ourselves back in December last year, but it just held that support. And if this falls at 140, somewhere in the middle, dollars a share, then you still have at 100 the next resistance where it has had its last major low. So maybe 10% in Nvidia here, and then just wait. If it's going to come down to $140, maybe add a little bit of percentage once more. Don't get wild in your portfolio with Nvidia, but you can nibble on it here. So that's enough about Nvidia. Let's also take a look at Intel. Intel, after everybody invested in them, the only one left to invest in Intel is the pops, and that's everybody then. Okay, and Putin can invest in Intel, and everybody can invest in Intel now because it's a company that has no future, but somehow Nvidia invests in them. The United States government takes share in them, which I don't think that's a good idea for long-term shareholders, but hey, okay. Nevertheless, let's take a look. The same analogy here. I'm just going to delete this. Same analogy here. Let's see where Intel could head if everything goes to plan. And the plan is don't fight the Fed. Actually, don't fight the trend. Don't fight the trend. The trend is bad. It's really, really bad. Because I would have to take here Fibonacci extension from here to here, down here, and this is hard. According to this extension and to the company that has relatively little future, does not have any kind of major revenue growth, we're not even at a 61.8% Fibonacci extension, meaning that this could go higher, but so the possibilities are there, but the probabilities for this to go high to the 127 is, I believe, low. Even to reach its all-time highs, which was in 2019. So yeah, December, January of 2019. No, wait, take it back to the 2000s. That is where Intel has had its shine and never shined like that, except in the 2000s. So you missed it in 2000, the top. You had a next top in 10 years. No, 20 years. 20 years. For someone who bought the share in 2000, and that's it, in 2000, 20 years later, 25 years later, they're still, I believe, over 50% down. So if you want to invest in Intel, just take a look, just zoom out and let it all sip in. Should you invest in Intel is the question. Is there a big savior coming for Intel? I believe not, but who am I to judge Intel? So let's move on to some materials and energy. MP Materials, another company that just got saved, all-time low. So this company started in 2020 and, well, it's now at all-time highs with almost $79 a share. With investment from the United States government, it's limbering down here, up here, it's limbering up here between the 78 and the 63 range. And I almost might say that this could have not going to do a Fibonacci extension here because it's just ridiculous. It could go higher. Now, I would not invest in them here. So I don't know. I just don't know. Don't care. Not going to touch this. Not going to touch this at all because it could come down and then just devastate everyone. Now, let's also take a look at a couple of defensive winners. Pepsi. This is why I was laughing at the start of the video. Take a look at Pepsi. Boom, earnings, bomb, good earnings, really good earnings. Not that good earnings, but better earnings, let's just say. Coming back from its highs of $196 a share in 2023, currently to its bottom of $128 a share, then back up again $157 a share, down again to $138 a share carousel, just the carousel, and now up at $150 a share. This stock on Friday shined as a defensive stock, and I'm going to short it because let's just be serious. If you want to invest in it and take home those 3.84% dividend yearly, then feel free to do so. It just gives out 105% of its dividend. The company has literally no possibilities to grow. I don't know how this company could grow anymore. So this right here, kind of AMD in a couple of years and Nvidia, and then they're going to come down because this company cannot grow anymore. Only if the Martians start buying Pepsi, if there's life on Mars and they do drink Pepsi and not cola, then we can see more growth in this company because it has to come up with new products, more sales, not that of a defensive stock like Procter & Gamble, for example, though Procter & Gamble is also down massively. Another one, KO, we were talking about it, Coca-Cola, also bad day, good day because of the tariffs. Is this going to turn around? I don't even care. Just take a look at Coca-Cola. What a ride. What a ride. If you're not Warren Buffett, then leave this stock alone. Leave Coca-Cola and Britney alone. It does not have any sense to, let's just see here. Take a look at this downtrend, which also could happen here. And if you're a long-term shareholder of Coca-Cola, do not sell that shares. Those shares, they're like gold. Not like gold, but they're good. But right here, if you want to mitigate maybe some kind of, though it's overbought on a short term, maybe it's going to go higher. Let's just take a look here at February and then April, down and up, and then lost its defense. So it's a defensive stock. If you believe that the next couple of weeks is going to be nasty for the stock market, buy some Coca-Cola shares, buy some GM shares, Philip Morris. There you go, that's a defensive stock. People are going to smoke, vape, whatever the hell they want to do. Okay, that's it for this part of the video. Now let's move to the next sections, which are trades. What trades did I make? So first week of October, mixed here. I did my trades, wind up $182 a share. So this is currently October, $182, not a share, $182 profit. So this is net, okay? Not gross, but net. September, we closed out with $2,874 net profit. October is going to be interesting. So let me show you why. Let's start out with trades. We are going to talk about the trades from the 6th to the 10th of October. Let's get started with the 6th of October. Nothing. Then let's move to the 7th of October. I didn't do any trades on Monday. Any sell trades. I didn't sell anything. Then on the 7th of October, we had Dell. Ticker symbol, Dell. I sold down the shares of Dell, making 68.44. And I must say that, let's add this. Let's take a look at the graph. Dell company up here. This is where I sold it on the 7th. Let's take a look at 7th. Okay, 7th. After that, it has a pullback. So jumped, pulled back. Problem was I bought it back here somewhere. So that is why my profit is low. Okay, this was on the 7th. On the 8th, we're going to come back to that. I did another trade. So that was on the 7th. Then also on the 7th, I believe I made half of my trades on the 7th. Sold AMD, advanced micro devices. I didn't sell everything, but made, first of all, a $268.38 gross, netting in 200 euros. That was euros. I'm going to explain this one day why I'm trading on multiple platforms. And yeah, made some profit on that. Then, what do you think I did next? Gold, GDI, sold some gold. Yeah, also this ticker symbol is okay. Doesn't really matter. So still on the 7th, sold some gold, made 89.20 euros. Let's take a look at gold, where I sold it on the 7th. There we go. 7th, sold some gold. Okay, gold went up once more. Eye scratching, isn't it? But still on the 7th, I sold some silver. I don't even know the ticker symbol of silver. Silver, the same thing. Just type in silver. Silver on the 7th of October. Made a trade here, 14.7 euros. Small trade. Silver then went back up. Still went up. Although I saw the targets. I saw the $50 target. I thought to myself, who knows? Who knows? Then on the 8th, Dell. Once more. Ticker symbol, Dell. On the 8th. So what happened here with Dell? I saw that the trend is up. Everything was just pointing up. And I said to myself, okay, let's do another trade. This time, grabbed a 98.2 euros a share, netting, this is gross, netting in $83.75 a share. Not a share, profit. Okay, then the 9th, Thursday, reduce Visa, ticker symbol V for Vendetta. Reduce the shares, 58.75 euros, profit there. Then Vici, ticker symbol Vici. Vici Properties, yield a dividend on the 9th, bringing me 39 euros. And of course, as I said, crude oil was looking delicious. But wait for it. First of all, WTI, well, let's just call it ticker symbol US oil, on the 9th made, so this was long, 68.1. Then on the same day after I sold it, I came to the conclusion that WTI is kind of looking to be shorted. But I also closed, sadly, that trade. So this is US oil, put on a short side, and made another 55.1 still on the 9th. Okay, so as soon as I sold my bullish position, I bought then a bearish position, started making money on that one. Then I saw that AMD, advanced micro devices, is again going up. So it's time to take a little bit more profit. 260 this time, 82. Took some more profits in AMD and also sold my PayPal holdings, ticker symbol PYPL, sold that one completely for a mere small 70.52 euros gain there. Now, this was everything was happening on Tuesday, and then Friday came. So do you remember, if you're following along with me, that I have told you that I have some bad news. The bad news is that, or the good news is that you're going to learn something. The bad news is that I also learned something, and you are going to learn it on my behalf. So S&P, let's just say, it's not the S&P Global, let's just say S&P short. Now, this is not a position that I put on Friday. This is a position that I had for months, from March, May. So you can imagine that a short position from May till now on the S&P 500 is not pretty. I'm just going to put in here the ticker symbol SPX. So I'm just going to tell you that I close partial this position, and I have a minus 1,610 loss on that. Now, this loss is due to the fact that when you're short something and it starts rising, then you lose money. So I lost 1,610 euros on my short position, and I only closed up half of the position. Now, I also got a tax return because it's settling immediately here in Germany, and let's just call this tax on the evening. So when it was settled and after the close, you're going to get back your taxes was 425 euros. So all in all, I didn't miss something here. Should be, I am down for the week 534, actually $620. And lessons learned that when things look dark, really, really dark, there's only sunshine left. So don't start shorting the market in the middle of a downfall. And with this being said, I'm NVDA. I build and protect wealth, although in this episode, it's not seen like this. But like, subscribe, catch you next time. Bye-bye, bye-bye.